Wall Street's trade of the year is in full force. Hey everybody, we have been talking about this huge monster reversion trade that is coming. If you guys don't remember, on June 20th, we highlighted probably our most important study of the year. The BMI was heading lower, S&P was going up, and here's what we told you. You had mega caps, the S&P 50 outperforming the equal weight by one of the largest margins in history. And in fact, if you look at the RSP to SPY ratio, it fell to 2008 lows. We told you that this usually precedes a very big catch-up trade where smaller, underloved, underowned, underappreciated stocks are going to get their love back, and boy, oh boy, have they. So let's go ahead and get into this awesome post. So what is Wall Street's trade of the year? Well, it's basically people rolling out of large cap tech and into small caps. So here we've got a year-to-date chart here, the Russell 2000. It is gaining rapidly relative to the S&P 500 and the NASDAQ. The interesting thing is small caps have already taken over the Dow Jones on a year-to-date basis. So a lot of people could not have imagined this, but that is how markets work. When everybody is piled into one side of the boat, it can tip over very quickly. So to show you just how much of a change in the breadth that happened with small caps recently, and this is since the CPI report in June that showed that inflation, the war on inflation, is effectively dead. Look at this, small caps. As this line goes vertical, that is telling you that small caps are getting accumulated a lot more on a relative basis compared to large cap tech. So if you're looking at your tech stocks, your semiconductors, and you're noticing, hey, they're not jumping as much as they used to, it's because Wall Street is in the camp that rates are coming down. And so who does that benefit? It's going to be the smaller, less capitalized firms. And it's going to also change the narrative for big cap tech, which everybody said the pristine balance sheets are going to do well. But when rates fall, it's not as sexy of a trade. So let's check this out. So why is this trade expected to continue? Why are small caps expected to continue to go higher? Well, here's the first study I want you guys to be aware of. On July 11th, that was when the June CPI report came, something awesome happened. You had small caps go up 359 basis points. That is the IWM ETF. It was up 3.59%, while the NASDAQ 100 ETF, triple Qs, it was down 2.19%. So basically, it was a 579 basis point spread. And you're like, oh, big deal, Luke. What does that mean? Well, check this out. If you go back in history, it was the third largest spread day ever. Here's what happens going forward when that occurred. And this is looking at 4% or higher. So we had 23 instances in IWM and triple Q's history. 1 month later, not much really happens. But here's what's interesting. 3 months, 6 months, and 12 months out, you see small caps, IWM, continue to go up. Double-digit returns a year later. NASDAQ stalls out, right? Now, this isn't suggesting that a crash is coming. It's just saying that people could fund this small cap trade by selling some of their winners in large cap tech. And honestly, let's get a healthy pullback. That would be a great buying opportunity. But there's another reason that Wall Street is excited about this trade, and it comes down to what's going on in the presidential election. So we had that assassination attempt of Donald Trump. And here's the deal. A lot of people are now suggesting that he is going to win the presidency. Doesn't matter which way you're going to vote. All we're looking at are money flows. And if we go back to when he won, shocked the crowd in November of 2016, I plotted the returns of IWM a month later versus triple Qs. And it's very similar to what's going on today. So here you've got the Russell 2000, up 9% in a week, up 16.1% in a month. And where did that trade get funded? it was clearly in big cap tech. Triple Qs barely was positive over this time frame. This is what I'm telling you. It mimics what's going on today, but let's go ahead and look at our big money data. Big money index is starting to go up. Remember, it was going down a month ago and we were telling you to saddle up. There's going to be a big reversion trade. That is IWM right there. The BMI is going up because small caps are heavily in vogue right now. They are the only major index that has not made all-time highs. We think that's going to change soon. And if you look at the big buying by market cap, holy moly, you can see it is really in favor of companies that are below 5 billion and this 5 billion to 50 billion mark. So a lot of that equal weight S&P is playing catch up right now. Small caps playing catch up right now. This is the trade of the year. Let's keep going. We can see just how many stocks are getting bought the most all year. Risk on action, but you gotta be in the right places. This is telling you that new leadership is happening on Wall Street. You're going to see industrials, you're going to see financials, you're going to see real estate stocks start to do very well in this tape. Also some discretionary names. So don't be surprised if some of those bench warmer stocks that you've kind of given up on, if they start to do better in the months and even a year ahead. It's about time. The trade of the year is here. I'll talk to you guys next time.